get in our bull and bear segment for today. And today we're not talking about a sector or a stock, we're actually talking about a sub-segment, and that's CDMO. CDMO players, in fact, have been in the spotlight after Trump indicated a 25% tariff on pharmaceuticals. Varsha now joins us with more details on this. Varsha.
Yeah, thank you for that. Actually, CDMO companies have been in buzz in last few years, rather 2 years now, because the CDMO itself, the sector or the sub-segment, it is itself growing in a double digit. But today I'm going to compare few stocks. So let me start with Piramal Pharma versus JB Chemicals. So in Piramal Pharma, if I were to talk about historical strength in Q4, which may continue. So company has seen a good growth in few of the quarters, and that may continue in Q4. While for JB Chemicals, if you see, there was a decline in revenue on the challenges faced in US and Russia. So though JB Chemicals have shown good growth when it comes to CDMO, but yes, they are facing challenges in US and Russia. Moving on, for Piramal Pharma, they are actually expecting 13 to 15% growth in revenue and in EBITDA in FY25. While for JB Chemicals, the CDMO business have faced material availability challenges. So this is on the disadvantage side when it comes to JB Chemicals. While Piramal Pharma is expecting to double their revenues to almost $2 billion by FY30 with 25% of margins, while JB Chemicals is expecting a slight dip in overall business growth in Q4. Next, let's compare Suven Pharma versus Laurus Lab. Actually, Suven Pharma and Piramal Pharma is buzzing. If I talk about Laurus Lab is under pressure. Suven Pharma is set to benefit from high growth CDMO segments, and Suven Pharma has a history of acquiring CDMO companies and taking them to the next level. While Laurus Lab, if you see, you have CDMO growth, though there was a CDMO growth, but that was offset by 7% decline in the generic segment that they see. When I talk about Suven Pharma, their CDMO revenue in Q3 was almost doubled year on year, while in Laurus Lab, if you see, though they have given a guidance of 20% margin in FY25, but there are high chances that they may not deliver their guidance, because management guided for 25% in H2 FY25 but reported only 20% in Q3 FY25. So walk the talk has been very difficult when it comes to Laurus Lab. So we need to see whether what the management is saying, will they be able to execute it, because in the past quarters they have not been able, they have not been very good when it comes to execution. So that's the disadvantage when it comes to Laurus Lab. While if you see Suven Pharma, they aim to achieve a revenue target of $1 billion US. While for Laurus Lab, if you see, the high non-CDMO business will suppress the overall margins for the Laurus Lab. So this is on the disadvantage when it comes to Laurus Lab. So this is all we have. Bull versus bear when it comes to CDMO as a subsector.
Interesting. Varsha, thank you so much for getting us all those updates there. In fact, we spoke to Aditya Khemka, fund manager at Incred Asset Management, about how does he see the CDMO space panning out. Listen in.
Basically, during the COVID period, I think India gave a message to the world that we are your friends. You can come to us when you are in need. And today, the global landscape is that 80% of the drugs that are available in the world have one way or the other dependence on China. The Western leaders are basically thinking whether such a dependence on one geography, that to a geopolitical adversary, if that is that basically wise to save a few dollars or a few pennies on the dollar. And I think that is where they have decided to sort of push the industry to look for an alternative. Now, when you look for an alternative in the CDMO space, you want the 3 C's. You want cost, you want capacity, you want capability. So barring China, the only other geography which can give you similar cost, similar capacity, similar capability is India. So which is why, many of those order flows from China are coming to India. Customers who are really buying from China are now looking to buy from India. Remember, China even today sells $40 billion worth of API and services to the world, and India sells around $4 billion. So we are 1/10 their size. So no matter how much China loses, 10%, 20% is going to be a very significant number for us. So clearly, that roadmap is there. CDMO is going to be a great story over the next 5 to 10 years. It will have its own cycles also, because remember, we are smaller pharma companies today doing the CDMOs. So 1 or 2 clients may dictate what happened to the entire earning cycle in a quarter or over a year also sometimes, because sometimes plans a year worth of goods in one quarter. So, there will be volatility, quarterly, annual volatility in numbers. But if you're taking a 5 or 10 year view, I think that's pretty clear to me that, CDMO will be a space to reckon with.
All right. That's the view coming in on the CDMO space particularly, but maybe if we can actually take a, maybe a technical view here on the entire pharmaceutical space. Rajesh, back to you on maybe if I can take a view on Laurus Labs. How is this one looking on the charts right now, and what would you do with this?
Well, stock has corrected in last couple of days, and in this correction, now stock is slipped below to 20-day, 50-day moving average. Looking at the near-term, short-term structure, I think if it's sustained below to 550 mark, continues to sustain below 550 level, I think stock may reach to the next lower side target of 520, 515. That's the important level in this correction. So those who wants to buy the stock should wait for 520, 515 zone. That's the important and strong support area in this correction. I think from there is a high probability of a reversal of trade. Once stock crosses above 555, I think then recovery can extend to 590, even 600 zone also.